Hello and welcome. I'm Suyash Maheshwari and you are watching First Take here on News9, where we bring to you the morning buzz on Dalal Street. Now, Indian markets have in fact scaled a new record high at open. We'll get to that in just a bit. But first, let's look at how the global handover was this morning, which by the way is looking quite constructive. Now, US markets saw modest gains in midweek trading as S&P 500 continues to move towards all-time high levels. Now the index is just a stone throw away from the record levels and perhaps it could get there by the year's end. Now the Dow on the other hand gained about 0.3% on Wednesday and Nasdaq ended about 0.16% higher. The European markets, which have opened after the Christmas break on Wednesday only, they also closed higher, and they are the pan-European stocks 600 index inched up about 0.3% or so in Wednesday's trade. Now things are also looking fairly upbeat in the Asia Pacific region. Hang Seng as we speak is up over 1.5%. South Korea's Kospi and China's Shanghai Composite are also trading about 1% higher this morning. Japan on the other hand is down about 0.5% or so. Now this could be due to some bit of a profit booking as Nikkei has rallied nearly 30% this year. This makes it the top performing index in the Asia region. We also have big moves in the US 10-year yields overnight, and the 10-year yield has now lost about 11 basis points and it's hovering below the 3.8% mark. The dollar index also continues to crack down and it has in fact fallen below 101 level overnight. Now meanwhile, oil prices, they corrected by about 2% with Brent crude back below $80 a barrel mark as investors monitored Red Sea developments, with some major shippers resuming passage through the trade route despite continued attacks and broader Middle East tensions. Back home now, as we were talking about at the beginning of the show, Indian markets have scaled a record high and Nifty has opened above 21,700 mark for the very first time, and the good thing is that we are building onto those gains. As you can see on your screen, as of 9:30 a.m. Nifty was up about 0.4% at 21,737 mark. Sensex is also trading higher, that is also at record high levels, and the index is up about 0.4% or so above the 72,300 mark. The mid cap and the small cap indices, although they are underperforming the headliners, they are also in the green. Nifty mid cap is back above 45,600, the level it struggled with all through yesterday. The small cap index on the other hand has scaled 15,000 levels. It had fallen from those levels on Wednesday's trade, so perhaps we need to keep an eye out for that. But the big worry for traders and investors going forward, at least in the near term, is going to be India VIX. That continues to track higher, and this morning it's up about 3% at 16 levels. Again, we have not seen 16 levels in nearly a month. The last time India VIX was at 16 was back in March 2023. But with that, let's also bring on board Mr. Akshay Bhagwat, Senior Vice President of Derivatives Research at JM Financial. Akshay, thank you for joining us here on News9. Now, we are just about 250, 260 points away from 22,000. Possible to get there in the last two sessions?
Good morning, Suyash. Well, the way the markets have been moving, it's a bag of surprises, I may say, because anything is possible. It's unstoppable. All I can see is that there was one surprise which the market gave us last Wednesday. Besides that, it's been a smooth sail for the market, and 22,000, 250, 300 points to be conquered in two trading sessions. Yes, very much possible. So keeping fingers crossed and hoping for the new year to end on a very strong note.
All right, and the banking pack, we were facing 48,000. That was a big hurdle for the index, and time and again the index was correcting from those levels. Yesterday we took out 48k and with conviction. Even this morning, the Nifty banking index as we speak is above 48,600. Now my question is, can we sustain above 48k, because that has been a very decisive level in the past couple of weeks?
Yes, 48K has been easily overcome in the last previous trading session. And if you look at the broader setup, Bank Nifty is taking the lead here.
Hmm.
And the reason behind India VIX going up is because, there is aggressive call buying, and this call buying is not fresh long additions. What I see is that a lot of call writers have been caught on the wrong side of the market, and they are being massacred. And that's the reason their unwinding of call shorts is the trigger for the possible upswing in the market. Now, Bank
Hmm.
Nifty, as I see, it's the momentum pickup here. It's easily the better of the two indices. A lot of private banks too are going to participate in the next leg of rally, and
Hmm.
easily 49,000, 49,500 is what I see on the cards. Support of 48,000 is the new support we should be looking forward to.
And Akshay, what's your view in the broader markets? We have been talking about froth building up over there time and again, but continues to surprise us. We have recovered, in fact, all of what we lost last Wednesday, and we are moving higher from here on. What's your view in the broader markets?
Yes, see, this is a momentum rally driven market, and one of the best times to be participating in the market, because money here is made to be made very fast and very soon. I
Hmm.
mean, if we were to draw a resistance or a barrier that this is too much overstretched, then really we are not going to have the best of the times of which the market is giving us an opportunity to participate in. So
Hmm.
here I would give the momentum indicators a miss for the time being, the way the markets are. Be with the flow and be with the way the momentum is. Chase the sectors where the money is flowing and the returns are fast to be made. So I believe the market is on a very strong footing. Rollovers, as I saw on the derivatives data yesterday,
Hmm.
long rolls both in Nifty and Bank Nifty are being positioned in the January series as well. So expecting this rally to continue unless and until the prices show some sign of kind of seeing profit booking or flagging out, then only we will take some profit booking measures. Till then, enjoy the dream run. This is the best of the times the market is offering you.
All right, enjoy the dream run, says Akshay. Now, shifting focus to stocks, Akshay, Ultratech Cement, that has crossed the M cap market cap of about 3 lakh crores yesterday. And, amid this rally in cement stocks, Ultratech has been the outperformer. I am looking at the performance compared to peers. It's up about 50% year to date. Other stocks are up somewhere between 17 to 25% or so. And on 1 month chart also, the stock is up about 20%. Is there more leg left to this rally, and can one look at Ultratech Cement at current price points?
Yes, yesterday on the chart, the technical structure was absolutely strong. We did see a strong breakout of a consolidation zone at the levels of 10,100. So technically, it is very strongly poised. It is just overbought, but this is a
Hmm.
market where you need to give the overbought parameters a miss if you want to participate on the trading front on catching the short-term momentum, because momentum stocks are what are going to promise you good returns in a very short time span. So here, Ultratech Cement at the levels of 10,440 still continues to be a buy. Maybe the froth is building up and might fizzle out soon, but I see a target till 10,775 on the upside. So maybe 200, 300 points more to go. If that interests you, you can pick up a buy. If you are holding the stock, that's the target you need to keep an eye on. Supports are around 10,250 at the current levels.
All right. And Bajaj Finance, now that stock had come under a fair bit of pressure in the last 1 month or so. But we are seeing some bit of a turnaround. It started yesterday. We were up about the Bajaj Finance stock was up about 1% or so. This morning, it's also trading about 0.5% higher. Has Bajaj Finance bottomed out on price charts?
On the technical front, yes, the charts are suggesting a possible buildup of a bottom base around the levels of 7,100. But really, the momentum has not yet caught up with Bajaj Finance. If you see, the
Hmm.
peers have performed, majority of the financial services companies are doing well, but this stock has been a laggard.
Hmm.
Clearly, the money is not chasing the stock, and I would like to participate in stocks where the money flow is in. So technically, it's not negative. It's in a range bound scenario. Your lower end of the range is 7,200, upper end of the band is 7,600. So I would suggest chase stocks where momentum is intact. If you're trading, then I would like to give this a miss as of now. Let it cross 7,400, then the stock regains its momentum. That's the buy point for me in Bajaj Finance.
All right. And Akshay, before we let you go, we are about to draw curtains on 2023. if you could give us your short-term trading picks for the next couple of weeks or so.
Well, on the short-term trading front, I have a majority of stocks which are all lined up on the buy side of trade. So the first stock here I recommend is Zydus Life, which is from the pharma space and has a very strong chart structure. It is setting up for a possible range breakout, so you can preempt a breakout and buy this. The momentum will catch up soon and give you targets of 705. So buy Zydus Life, target 705 with a stop of 677. Second trade recommendation is Maruti. Now, Maruti has been an underperformer in the auto space. Its peers have done absolutely phenomenal. If you look at Ashok Leyland and Maruti, somewhere they have not yet participated in this run in the auto segment. My belief is that in January series, Maruti should kick off on the buy front. So consider this trade where you buy Maruti for a target of 10,590 with a stop loss of 10,288. Third recommendation, financial services company, Muthoot Finance, a very strong chart structure. Again, another candidate which is in a consolidation and setting up for a strong upside breakout. Buy Muthoot Finance, target 1514, stop loss 1457. Fourth trade is from the banking space, both PSU banks, the fourth and fifth recommendation. PSU have been in the limelight. Story is not yet over. They will continue to hog the limelight if the indices were to perform strong. Here, Bank of Baroda and State Bank are the two other picks I have on the buy watch list. Buy Bank of Baroda, keep a target of 247 with a stop of 225, and State Bank of India target around 668 with a stop loss of 637.
All right, that's Mr. Akshay Bhagwat for you, sir. Always a pleasure joining, talking to you here on First Take, and wishing you and your family a very, very happy New Year, and everyone at JM Financial's season greetings, sir. Thank you.
Happy New Year. Best wishes to you.
But with that, let's take a short break. On the other side, we have the big listing of Azad Engineering, and we'll also be joined by a very special guest in Mr. Rohit Srivastava. So stay tuned for that.
Since the last 2 years, Khalistani terror groups are threatening Indian diplomats in Canada, US, UK and Australia. Investigations of these threats led us to the first ever abduction and killing of an Indian diplomat, Ravindra Matre, in UK's Birmingham in 1984. Our months-long investigation finally led us to the murderer of Ravindra Matre, who has been hiding in Pakistan-occupied Kashmir for the last 40 years. Watch our exclusive documentary, Murder of an Indian Diplomat, where we reveal the man who killed Ravindra Matre.
Stop searching, start streaming. Download the world's first news OTT, News9 Plus, ahead of the curve.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There is certainly a wall of capital coming into the clean tech, climate tech space, not just in India but across the world.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
Yes, the scale of the attack surprised us. When you get a series of alerts, 16 intelligence alerts, if Maharashtra government at that time had alerted the Coast Guard and the Navy, this 2611 would not have happened at all.
And one of the details they had planned was to use these dhagas to mislead the investigative agencies.
All this was to be presented as a Hindu terror.
So it was a Pakistan operation. The LET was the front end.
Once the attacks were on, it was clear that they were planned and launched from Pakistani territory.
For all of those victims of terror that was exported from Pakistan over the years, including but not limited to 2611.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
Welcome back. You're watching First Stick here on News9. Now, Indian markets are holding on to the morning gains with Nifty still above the 21,700 mark, and we are just about 25 points shy of the day's high. And as of 10 a.m., Nifty 50 was just below the 21,750 mark. In fact, we are just about 10 points shy, as the all-time high and the intraday high sits at 21,759. Sensex is also, trading in that range. It's up about 300 points this morning, over 300 points in fact, and we are at 72,356 mark. And for the index, the all-time high is 72,368. So just about 12 points shy of the day's high. The mid-cap and the small-cap indices are also holding to the morning gains, although they have not been able to build up much on it. The mid-cap index is still above the 45,670 marks, fast approaching the 45,700 mark, and the small-cap index has in fact reclaimed 15,000. It opened about 15,000, just at 15,000, and that's where we have been taking support so far during the session. Now remember, we have not seen 15,000 since Wednesday last week, the day when we saw the big shakeout where the indices corrected by about 3 to 4%. India VIX, that continues to be a cause of worry, and the India VIX, that's up about 3.6% at 16.12 mark at 10 a.m. this morning. We also have a big listing of Azad Engineering, which by the way just opens in in a few minutes from now. As you can see on your screen, the visuals from BSE of Azad Engineering. The stock has listed on the bourses, and I was looking at the pre-opening price. The stock has settled at somewhere around 720 mark, which implies an upside of a listing premium of about 37% over the IPO price of 524. Now the premium, at least according to the grey market, was expected to be around 50% or so. So a slight disappointment, but still a bumper listing for Azad Engineering, and we'll just get you the numbers as and when they are updated. But with that, let's also bring on board Mr. Rohit Srivastava, founder and market strategist at IndiaCharts.com. Mr. Srivastava, thank you for joining us here on First Take. Appreciate you joining us here. Now, typically during this time of the year, institutional participation is low. But yesterday something very interesting happened. FIIs pumped nearly 3,000 crores in the cash segment. Are we seeing FOMO playing out here, given that the kind of returns we have seen since late October?
Yeah, thank you. Good morning. And definitely there's some degree of FOMO. See, FIIs haven't been persistent buyers. If we look at the full year number, including yesterday's data, it's minus 22,000 crores. Now, of course, that's not as big as last year's minus 278,000 crores of outflow. And the reason for that is that on a monthly basis, we've had a couple of good months, during this year. One of them has been December. So that sort of, pulled us back into the green. In fact, March, April, May, June, these were positive months. And then you had negative months of August, September, October, and then again November picked up, and December's been pretty good. So we've had FIs come on and off, in and out of the market. And that is so that is why it's an unpredictable, but surely after the recent Fed announcements, we have seen some degree of FOMO money, also because the dollar is consistently falling every day. I'm not really betting on the continuation of that trend because, like I said, they've been on and off. They came in for 4-5 months mid of this year, and again they went negative after August. Let's see what happens in January because January is a critical month. The year end is over. So whatever money is being pumped in now is basically year-end allocation that may have been done even before the holidays and has to be completed. When the new year starts is where new allocations actually are done for the year ahead, and that can be very, very different. Jan, in a sense, also has a history of being more negative than positive. Out of the last 10 years, 7 years were negative returns and only three were positive returns, even though the average return is zero. And so it's not the best time to go all in. It's a very good time to take cognizance of where we are and really look for some downside and a better opportunity to buy the lows as and when that happens. So we really need to approach the new year with caution. But yeah, it's been a great year-end rally.
All right. Approach new year with caution. And so you rightly pointed out that January is in fact a period of lull for the Indian markets. But bringing back the focus on FIIs, do you think that the emphasis on their activity is disproportionately high? Because again, I was looking at the historical data of the past decade. It indicates that in 7 out of the 10 years, net FII activity in cash segment was negative. Yet the markets have rallied, and how? So do you think that we pay too much attention to what FIIs are doing?
To some extent, it is true. Historically, it has played a role because it was the only source of liquidity. Now, thanks to SIP becoming so widespread, I think since the mid 2015s when FII flows turned negative, SIP flows had turned positive by 5,000-6,000 crores, then 8,000. By COVID, and then after COVID, it's now gone to almost 15,000 crores a month of inflow. That sort of helped stabilize the situation in terms of their impact. But if I look at a lot of history, it's not always been correlated. So even if I go back 20 years, I remember when FII flows actually reached new highs in terms of positive flow, it was in the midst of the Y2K bear market, which is when stocks were actually crashing. And they were buying the most that they had ever bought at that point of time on a relative basis. Did that keep the bear market from going on? The answer is no. So we do pay too much attention on a day-to-day basis trying to predict why the market went up, and it's always hindsight analysis. For example, yesterday the market goes up, and at the end of the day, when you see a plus 3,000 crores, you say, this is why the market went up. But there are many days when market can fall, and you can get a positive flow, and you cannot explain why the market fell if they were buying. We shouldn't. In my mind, we don't pay too much attention to the day-to-day flows in the cash market. We do pay a lot of attention to the position that participants, FIIs, DIs, and client side have in the futures market, specifically the index futures, and that tells us the sentiment at any point of time. And right now, if we talk of sentiment, it is at an extreme because you have large long positions by FIs and probably the highest short position since 2017 on the client side.
But do you think that the heavyweights are now playing a catch-up because the big one, the Nifty Bank Index, has only started participating now, and heavyweights, although they have rallied, they are significantly a fair distance away at least from their all-time high levels.
No, surely, and this whole discussion about FII flows plays a role there because most of their buying ends up being in large caps because it's very macro allocation. The way global funds allocate is they're either linked to an MSCI EM index or some kind of a model where you say, okay, I need to allocate to emerging markets. India is this percentage of that, and so much money comes into India, and usually those indices have a lot of large caps built into them. So large caps is where most of the money goes. So moment you got a positive month on institutional flow, that means the large caps start participating. So that is sort of what we have seen.
All right. Now, sir, India VIX, now that has seen a sharp spike in the last couple of weeks. We were at about 11 levels or so. Now we are at a 9-month high above the 16 sort of levels. What does that indicate, and is that going to be a cause of worry for investors?
It is definitely a cause of worry. I mean, the last time you saw this happen was at the October 2021 peak. So in the month of October in 21, where the market topped out at 18,600, then it stayed below that for almost 6-8 months. I think almost a year in terms of time taken, but it was falling for the next 6 to 9 months. At that time, the India VIX had also moved up while the market was rising, and then eventually the market gave up. I think we have a very similar situation here because the rising India VIX is not because of event risk. Usually, if you have an event like if this month you had elections or this month you had a big policy meeting or something like that, which the market was pricing in, then usually after the event, the IVs come down and then it stops having an impact. But here you're seeing IVs go up not because of any event risk, it's because of market behavior. And that is usually a negative divergence when VIX and equities are rising together. It's also, and what this also signals is the exuberance itself. Question people are asking is, why is the VIX going up? The answer is very simple. VIX is related to the premiums that you pay in the options market, which means you're willing to pay a higher and higher premium to buy calls or puts. And these premiums are directly linked to the futures premium as well. The Nifty futures or the stock futures is what determines. So if the stock future premiums go up, it pushes the options premiums also higher. So we are seeing the highest index premiums also, which is the Nifty spot to futures difference at over almost 200 points for the January series is one of the highest on record. And therefore, that itself indicates excessive bullish sentiment in the market. That bullish sentiment is expressed in higher premiums, which is what the VIX is really telling you. So it's sort of telling you that people are over bullish. It is a risk as in when the market reverses course from here, that excessive bullishness will unwind and cause some kind of a knee-jerk reaction, which is what I think Jan 2024 can bring.
And talking about market reversing its course, do you think we are right there? Because market does look overbought, and January typically is a muted month for us. Do you think we can see a pivot from here?
No, so January is not a muted month. It is a very heavy month on either side. Like I mentioned, it's either down or it's up big. And 7 out of 10 years was negative.
Right.
And only 3 years were positive, and those 3 positive years were also pretty big months. So January does see a lot of movement. And yes, so that does put us at a point where a reversal from up to down could actually give you a very sharp move to the downside as and when it happens, except that you need to wait for it because seasonally, markets don't always top out in December. So if they had to, they would have done so in the first week of December. Now that we've extended, usually you will see the all-time highs continue into the first week of January. So I would think the final peak is only made on, say, Monday after New Year's rather than today or tomorrow. So we may continue to see the market trying to extend higher as it has done today and even into tomorrow, and only finally see the peak sometime next week. That is how we'll look at it.
So, Mr. Srivastava, would you advise investors, and I'm talking specifically about them because high VIX is a playground for traders, would you advise them to take some money off the table now?
Yes, definitely. That's been my communication, that each one on his own, but you need to raise your risk levels by raising your cash levels, which means you should create some cushion based on what you perceive as the downside risk. And as you get more confirmation, you can increase that, but at least start with something. And each one can have his own percentage based on what risk appetite they really have. But definitely, this is a time when its exuberance is when you can actually sell very easily. If you try selling stocks, probably it'll be easier when everybody's buying than if you try selling when everybody's trying to sell. So it's always a good thing to book gains. You don't always get the opportunity to do that at the highest levels.
All right. And Mr. Srivastava, before we let you go, we are like 2023 pretty much was a year for PSUs. Various sectors performed there, realty as well. Stepping into 2024, what sectors particularly could one look at to add to the portfolios?
So some of the sectors that have done well usually continue to do well. Now, if you do get a difficult market, I would say pharma would be a saving grace because the pharma sector actually didn't participate except for the first part of the COVID rally. And then after that, they went into a long, deep correction. And now they're actually picking up. So there's a very much a possibility of outperformance in pharma in a difficult market. But let's presume, okay, you get a giant correction and the market is not so difficult. It picks up again. If there's positive momentum, then you actually go back to the strongest sectors, which means everything from a PSU to what you're seeing right now in metals, coming back most of 23. Actually, we didn't see very great strength in metals. Only in the last month we've seen them pick up. It may be an early sign that the metals are making a comeback. So if we do get that pullback, metals may be one place to revisit, from a longer term standpoint, where they may be starting a fresh cycle to the upside. So these could be two sectors I can think of. Banking, of course, is another which is significantly underperformed and can actually play catch up in a big way.
All right. That's Mr. Rohit Srivastava for you, sir. Always a pleasure talking to you. Thank you for joining us here on First Thing, and wishing you and your family a very, very happy New Year, sir.
Very, very happy New Year. Thank you.
But moving on, Indian markets, and now we are seeing some bit of a profit taking at higher levels, and in fact Nifty, in the time we were speaking to Mr. Srivastava, has given up about 60-70 points, and now we are in fact below the 21,700 mark. Nifty, as we speak, is somewhere around the 21,690 levels, whereas Sensex has given up about 200 points or so. We are trading flattish now, but still in the green, as you can see on your screen. The mid cap and the small cap index, now volatility is higher over there. The small cap index, where we were talking about, the index pretty much reclaiming that 15,000 mark and defending it. We have in fact slipped below 15,000 levels, and as of 10:15 a.m. Nifty small cap 100 was below about 11-12 points below the 15,000 mark. The mid cap 100 has given up all of its early morning gains. In fact, it's flat at 10:15 below the 45,600 mark, and India VIX continues to inch higher. It's up almost over, in fact, 4.5%, and fast approaching the 16.3 sort of levels. But with that, it's a wrap on this edition of First Take. But stay tuned with us, as we'll be back with Business Plus on the other side.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है Money9। आजादी पैसे की, अभी डाउनलोड करें।